What's up, YouTube? This is Mike Kelner, Entrepreneur, coming back with some more entrepreneurial content. Today's topic, we're going to be talking about the balance sheet, and we're going to do that right now. Welcome to my channel. If you are new and you have not subscribed, please do so by hitting that subscribe button, also banging on that notification bell, and then give this video a thumbs up, give it a like, so that YouTube is more likely to share this content with other entrepreneurs and startup business owners just like you, so that they can get their business started in the right way. Like I said in the intro, today we are going to be talking about balance sheets. And the reason why we're going to be talking about balance sheets, there's going to be a 3-part series that I'm going to be doing for this. I already completed the first series, and that was cash flow statement. And you can check that out. I will link that up in this card above. I'll also put it down in the description. Today is that second series where we're going to be talking about the balance sheet. And then I'm going to be doing the third portion of this series, and that is going to be on the income statement. Now, the reason why it's important for you to know all 3 of these statements is because if you want to grow as an entrepreneur, you should know what these statements are, how to read them, and how to create them for your business. So let's get into it right now. Each of these business statements have their own individual purpose, and they tell you something different about your business's financial health. When it comes to a balance sheet, it's telling you the value of your business. When you're thinking about a cash flow statement, that's telling you how much money you're able to bring in through your business, which is really important for investors. When you're thinking about the income statement, that is telling you how profitable you are. So let's talk more in depth about the balance sheet. So the formula for the balance sheet is assets is equal to liabilities plus owner's equity. So I'm going to break it down for you guys so you can see exactly what I'm talking about. I actually created my own balance sheet and my own income statement and cash flow statement for my own business, and I will actually put that down in the description below so you can start utilizing this for your business as well. So let's take a deeper look into the balance sheet. So if you look to the left of the balance sheet, that is going to be your assets. So that's broken up into 2 categories. The first one is going to be your current assets, and then the second one is going to be your fixed assets. The current assets, and keep in mind, all of your assets are going to be listed based on their liquidity, and liquidity means how fast can you convert that asset into actual cash. So naturally, number 1 is going to be your bank accounts, because ultimately that is cash. The next thing is going to be accounts payable, and that is going to be any money that is owed to you from one of your clients. So you're honestly just waiting for your clients to actually satisfy their invoice, right? You did some work for them, you did everything you needed to do to actually get your money, you're just waiting to receive that money. The next thing is going to be prepaid cost, and that is anything that you have paid but it hasn't quite gone onto your income statement. The last one is going to be inventory, and we all know inventory takes the longest to convert to cash because you have to actually sell it. So that is going to be all of your current assets, and then it'll equal it up right at the bottom of that. The next thing is going to be your fixed assets, and this is anything that you own that you are going to be using, or an asset that you're going to be using within the business. So there's 2 terms that I want you to remember when it comes to your fixed assets. Number 1, that is going to be short term. So anything that you are planning on using under a year, that is considered a short term asset. And then long term is anything that is greater than a year. So if you're planning on using it for greater than a year. Now, with your fixed assets, that is going to be things like your office building, it can be equipment, furniture, things like that. That will all be listed there. Those are the most common things. And then right at the bottom is going to be your depreciation. So keep in mind everything that is listed here. So your furniture, your equipment, all that is going to stay at your purchase price. So every single time you have this balance sheet, as long as it's an asset that you still have within your business, you're going to list your purchase price. But the depreciation, that is where you're going to list if you had a depreciation on certain equipment, or typically when it comes to real estate and things like that, that is, you know, that appreciates over time most of the time. But when it comes to certain things, certain assets like equipment and furniture, things like that, that does tend to depreciate, and as a business owner you can take the depreciation on those assets. So you would put that there, and then at the bottom would be your total fixed assets. So it would just be all of your assets together minus the depreciation, and that will give you what that is. So ultimately at certain points you could actually be zeroed out at your fixed assets if you don't upgrade your equipment or things like that. So that is a possibility. So now let's move over to the right side of the balance sheet, and let's remember Your balance sheet's equation is assets is equal to liabilities plus owner's equity. So on the right side at the top, you're going to see all of the liabilities, and right below that, you're going to see the owner's equity. So let's talk a little bit more about the liabilities. There's two sections in this that I want you to keep in mind. And the top one's going to be current. There's two different categories within that. The first one is going to be unearned revenue, and that is any revenue that is prepaid through your customers. So you have a liability to actually satisfy that. So your customer pays you $1,000 in advance and you have not produced that item yet. So that can be a liability because you have to produce it in order to keep that money. The next one is going to be accounts payable. So that is anything that you owe to your vendors or you owe to someone, outsourcing, whatever the case may be, anything that you owe through your business, that is considered a liability. The next portion is going to be long-term, and these are things like loans, mortgages, things like that you have to pay out of your business, liabilities that you have to pay out of your business. Also, if you have credit cards under your business's name, those will also fall within the liabilities as well. Now let's go down to owner's equity. And there's two things in the owner's equity that I want to talk about, but let's talk about the second one first, and then we'll talk about the first one. The second one is going to be owner's accounts, and that is going to be a contribution account slash a withdrawal account. If you're running an LLC, they're going to be members. If you're a sole proprietorship, it's just you. So at the end of the day, you should have an account for your business so that any money that you are receiving through the business or you're contributing to the business should go to that owner's account, and then that gets funneled into the business. So those account values should go there. Depending on the type of business structure that you have, you want there to be different types of bank accounts that you would have. So that is that portion. The top portion is going to be retained income, and this is going to be any of the income that is earned to date for your business. And this is where the balance sheet and the income statement have that conversation. So that number is going to come directly from your income statement, and that is going to basically say what the profitability of your business is at that given time. At the end of the day, your assets should be equal to your liabilities plus your owner's equity. If you guys have any questions, if you want to actually download the free template that I have for this balance sheet, I also have the cash flow statement as well. So if you guys want that as well, please check the links down below in the description. I have them for you. If you found value in this video, please give this video a thumbs up. Also share it with another entrepreneur that is trying to grow their business. On your screen, I made it very easy for you. You'll see the cash flow statement video that I did. I'll see you in that one.